Credit cards are the golden nugget of the retail banking industry. Current accounts, mortgage and savings all earn a pittance for the banks in comparison to the credit card, so this is where all the attention is. Ever wondered why your bank ever so subtly will try to sell you a credit card when you have any other question or you're on their website? Or why almost all advertising of financial services products seems to focus on plastic? Today, credit cards are a ubiquitous part of everyday life. The vast majority of us have at least one credit card, and we use them for almost all of our spending without batting an eyelid. Paying for things with cash has quickly gone from being the sensible option to something associated with tax dodging. Paying for things with a credit card is so easy and convenient that we have disassociated the concept of money and payment. Why worry about parting with actual physical cash today when you can think about parting with a larger pile of hypothetical cash at some point in the distant future? Countries like the United States and the UK are so entrenched in debt that financial services companies including American Express and Visa make up 5 out of the 30 companies on the Dow Jones Industrial Average. In 1979, this number was 0. Over 100,000 people a year attempt suicide due to problems related to debt. Debt causes untold amounts of anxiety, misery, and depression all over the world. You'd think that somebody would want to do something about that. Other popular vices leading to depression, such as alcohol, smoking, and gambling, have all felt the heavy hand of the law with ever-tightening restrictions on sales, bans on advertising, and punitive taxes. But credit cards? No, they don't seem to count. Adverts on daytime TV? Tick. Massive billboards everywhere you look? Also tick. Online banners, football stadiums, and even the Premier League itself? Absolutely nothing is off limits. It's gotten so out of hand that now the companies that advertise credit cards are some of the biggest advertising spenders themselves, marketing their marketing of credit cards.
For compare credit card, go to comparethemarket.com.
The only restrictions placed on the advertising is the need to show people a representative APR statement, which shows them an example of borrowing a completely different amount to what they will actually borrow. At a representative APR, they have a 49% chance of not getting, and repaying in timescales they will usually not stick to. It all started in the 50s, with companies like Diners Club and American Express making it more convenient for the American elite to visit restaurants. The principle was that they didn't have to worry about carrying large wads of cash to pay for their expensive meals, and instead, they could put it all on an account that gets settled at the end of the month. In the space of a few decades, credit cards have quickly gone from a luxury convenience item to the way millions of families make ends meet to put food on the table at the end of the month, waiting for the next paycheck. But where did it all go so wrong? Borrowing money is as old as humanity. You need, or in many cases want, to spend money today that you don't have, so you borrow it and you pay the money back in agreed timescales with a little interest on top for the privilege. Until recently, borrowing money was a complicated process. You'd have to make an appointment with your bank manager, sometimes several days or even weeks in advance. You then have to go and sit there, go through a lengthy application process which could take an hour, sometimes longer. They'll go through every single element of your spending, your finances, talk to you, try to understand exactly what the debt is for, and only then will you be able to borrow. Today, all of that has changed. You're now 60 seconds away from having a decision. All you need to do is type your name, address, and date of birth into the credit card application form, and hey presto, you've just gone and got a shiny new bit of plastic. Rules say that credit card applications must not make it seem that obtaining credit is easy, so the credit card companies duly oblige by telling you that the application is the easy bit instead. Applying for credit cards used to send a bad signal. You would have a search marked on your credit bureau, and then all the other credit card companies, financial services companies would know that you've been looking for more debt, and that would create potential issues. But even that has now gone away. Say hello to the new soft check, smart check, quick check. You can keep applying for credit as much as you'd like, and it will have absolutely no impact on anything. Amazing. Even more amazing is the fact that credit cards no longer advertise their actual purpose. Providing credit. No, now the reason you should get a credit card is because you will get points, you'll get cashback, air miles, silver, gold, platinum and black statuses, and all kinds of other stuff. You definitely aren't getting a credit card to borrow the money. You're so financially astute that you're going to walk away with a ton of free cash, a load of free points, never pay a penny in interest, except more than half of you will not pay the credit card in full and you will pay interest on it every single month, with the average interest today climbing towards the 25% per year mark. The points and cashback you're earning are worth so little in comparison, it's a bit like buying a new car because it comes with a free air freshener. But people like collecting meaningless points and air miles that cannot actually be exchanged for any flights you want to go on. Just look at the 500 million people who play Candy Crush, or the natural human propensity to collect things. Nobody understands how credit cards actually work. How do you calculate a monthly amount of interest from an APR? What is representative APR? What is residual interest? What are the different balance categories? How exactly does the minimum payment get calculated? The industry will tell you every step of the way about how tightly regulated they are. Everybody is authorized and regulated by the Financial Conduct Authority or a different entity in a different country. And this means they have to follow strict rules, lots and lots of strict rules. These rules are designed to help and protect the consumer from unfair business practices. Like making sure consumers understand exactly how much interest they'll be paying when they borrow in a credit card, and making sure that credit card companies can't charge you fees because they have charged you fees because they have charged you interest. I mean, it would be wrong if customers were encouraged to borrow money that they don't actually want to borrow, or to lend them more money than they need just because you want to earn a bit more interest. And that very low interest rate that you had on your credit card when you first applied? Well, don't you worry about that. That rate can change at any time. The credit card company will just send you a letter, they'll increase it to whatever they fancy, they'll give you a very broad general reason for why they're doing it, and over 90% of you are going to accept it and continue using the credit card and paying it at the new higher rate. But hey, don't you worry about any of that. You can check your eligibility for hundreds of credit cards in just a few clicks. When you've chosen your credit card, you can start spending on them right away. Waiting for the card to arrive is just so last season. You can now pay for things without having to bother with the inconvenience of having to sign a piece of paper or even the need to type your PIN. You can just touch your card and go. If you forget your card, don't panic. You can just as easily continue spending on it by using the one thing you won't forget when you leave your house, your phone. Can you actually remember how much you spent the last time you went food shopping or the last time you ordered a takeaway? No? No, I didn't think so. Paying with a credit card is so easy, you can relax and not concern yourself with the concept of money or how much things actually cost. Everything about the way a credit card is designed exists for one purpose and one purpose only: to get your balance as high as possible, as quickly as possible, and to keep it there. You can buy everything using a credit card. Even the law is helpful now that it is illegal to charge extra for credit card payments. Your statement will clearly show you the total balance on your credit card. Don't have the money to pay it off? No problem. You can make the minimum payment instead. It probably comes as no surprise that the minimum payment is not just the lowest possible amount people can pay on their credit card, it is also by far the most common amount people will actually end up paying. You really don't want to encourage people to pay more because, well, that's just going to reduce the balance, right? Setting up a direct debit is good for you. It stops you accidentally missing a payment. It also stops you accidentally making more than the minimum payment, which is mighty useful. The cycle just keeps on going and going and going until you max out your credit card, and this is where the fun really starts. First, your credit card will be so nice as to give you a credit limit increase, or two, or however many it is that you need to get you to the right level of balance. Once you've maxed the highest credit limit they will give you, you can play level 2 of the credit card debt game and transfer your balance to a special 0% balance transfer credit card. Don't worry too much though, you will only repay a fraction of the balance on that credit card by the time interest kicks in, and you'll also spend on it after you've made a few repayments to keep your balance as high as possible. That old credit card that you just repaid is going to be cut up and thrown in the bin, right? You're not just going to go and begin using it again, build up the entire balance all over and now have 2 credit cards full of debt. If the idea of a simple credit card just does not appeal, don't worry, we will get exactly the right credit card for you. Do you like travel? Perfect. We'll get a credit card that allows you to get in debt when you're abroad without charging extra fees and throw in some extra air miles. Are you a football fan? Amazing. We're gonna print your favorite football club logo on the front of your credit card to make sure that you use that credit card absolutely everywhere you go. The net sum of this entire strategy is very simple. Credit card companies want you to get into a financial prison that you will never ever be able to get out of. You're saddled with credit cards that have much higher limits and much more debt than you can hope of repaying in any reasonable circumstances or timeframes. A credit card with a £10,000 balance at an interest rate of just 16.9% will take over 36 years to repay if you're just making the minimum payment, and you will pay over £13,700 in interest in the process. The vast majority of UK credit cards have interest rates much higher than this. Credit card companies are not too excited about acquiring new customers or the early stages of the customer lifecycle. New customers cost them money in advertising costs, having to pay for the comparison websites and processing, and a lot of other small expenses. While the debt is low, the customers are not yet paying the sort of revenues that a seasoned banker will be too excited to get out of bed for. The thing that really does get a credit card company excited is a mature back book. These are the customers that have had their credit cards for years, they've built up the right balances, they've proven that they can continue making the minimum payment, and also proven that they cannot repay the credit card in full. Year after year, they'll be paying an average of 25% in interest and a whole load of fees on top for no particular reason. And they can't borrow any more money because they've already borrowed too much. They are in a perpetual debt prison. In fairness, the FCA that regulates credit cards has recently passed new regulation that has been specifically designed to combat this problem. The wording is not particularly transparent, but what it basically amounts to is that credit card companies should not charge you more in interest in fees than the amount of the principal loan that you repay on your credit card, on average, over a 3-year period. That's it. The help is that if you've been paying more to the bank over 3 years than the amount you've actually been repaying of the debt, then your charges might reduce, or you might have to pay more. Say a big thank you. The objective is to keep you in this financial prison for as long as possible and to stop you from leaving. If you try to stop paying, be prepared to receive a swathe of angry letters with bold red writing. Your credit card is unsecured, which means your house and possessions are safe, until the credit card company goes to court and gets a judgment, which means that they can go and repossess whatever it is that they want. If you're new to the credit card game, thinking of taking a new credit card, or just interested in the topic, make sure you have a big long think before you get too far down the wrong path. I hope you guys enjoyed this video. If you have, please make sure you hit the like button. It takes a really long time for somebody who's brand new to this to film these, edit these, put them on YouTube. I really appreciate your help, and it's also great for the YouTube algorithm. If you haven't subscribed already, please make sure you subscribe. Please hit the bell so you get notifications every time one of my videos comes out. I'll see you guys later.